Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, I kind of missed yesterday. I sort of had some technical issues. Once again, I seem like I'm Mr. Technical here, and I wasn't able to broadcast. But today we're up on we're up on four different streams. One on TikTok, one on YouTube, the other one on Instagram, and I think so, and the fourth one on LinkedIn. So we're getting there. We're getting there. Well, interesting times. I mean, the Dow is up 200 points on a on the prospect of a interest rate rise. That's very strange. I don't get it. But it looks as if it looks like they're going to go all guns in, and we're going to get a very big interest rate rise coming up here, and hopefully this will be the last one. But who knows? There is some there is some there is some there is some indication that we're starting finally to see sort of some effect. The price of copper is dropping. The price of oil was under $100 a barrel. That's important, and it does seem like the economy is slowing. I mean, that's obviously to get rid of the inflation. That was, of course, the what they wanted to do. With everything, they wanted to basically kill the economy so that they could get the inflation down. You go figure. The first casualty of the crypto wars, and I want to put this out there, the lender called Voyager Digital. I don't know if you've heard of this one, but Voyager Digital, it's a crypto lender. They just declared bankruptcy and they filed for bankruptcy. Now, here's the thing. If you're in any of these crypto exchanges, you got to be super duper careful because they're not FDIC insured. And what happens in the bankruptcy is that it's called a bail-in. So anything that you have in any of these things, Coinbase or anything like that, when the bankruptcy happens, guess what? You become a general creditor, and you're very likely to get only cents on the dollar. So, not trying to give any advice here, but one thing I just want to put up there for everyone that does have crypto wallets. Good time to cash out now, because with this issue, with bankruptcies and failures in the crypto companies, I think that this is going to be a cascading thing. And when a bankruptcy happens with crypto, you get what they call a bail-in. It's not a bailout; it's a bail-in. And a bail-in means that if you have assets in that crypto exchange or whatever. Well, guess what? They become part of the general creditors. You become a general creditor, so you're very likely to see nothing. You're basically cents on the dollar. Again, I'm not giving legal advice here, but right now Bitcoin is hovering right about 20,000. And it does seem to be holding a little bit, but if it moves below 20,000, I believe the next stop is 8,000. So I think you got to be super duper careful here. Basically, the crypto lender Voyager Digital said Wednesday that's going to file for bankruptcy, and it's basically another casualty here of the crypto thing. This is the problem with crypto. It's not FDIC insured. It's having trouble, and it could be very big, very big difficulty. So just be very, very careful. Just wanted to talk about the bulls and the bears. This is a kind of it's a psychological indicator. It's not really a true indicator of the market. But right now, the bears are in control. 40% of all the financial writers right now out there are basically saying that we're in a situation where we're going to see further declines in the market. I think that's pretty I think that's pretty self-evident right now, because I do expect another leg down. Even though we did have a movement up today, I don't think the pain is ended. I'm looking at sources, reading charts, and I'm looking at possibly we're just at the beginning of the recession. It hasn't been called yet. I don't expect it to be, because I expected them to revise numbers and do all this stuff. But we are, I believe, in a recession, and that's two back-to-back quarters of negative growth. And of course, I think that if they raise the interest rates more, and they will, because they have to tame inflation, that will further push us into the recession. Now, I think we're just at the beginning here. I don't think we're anywhere near the end, and I do think that we're going to go probably a little bit longer here, likely to, I think it's probably going to be, it's probably going to be fairly severe towards the end of the year, and then into next year, I do believe we're going to see a lot of pain, but I do think that by the end of 2023, I think we'll be out of it. But for right now, cash is king, so you got to be really careful out there. The price of oil has gone down. Right now, the price of cash, and this is very strange, is actually appreciating. So when oil goes down, when gold goes down, and when crypto goes down, cash goes up. So right now, the best stance, I believe, in the market, and I'm about 97% in cash, is to be in cash. It sounds totally counterintuitive, but I am in cash pretty much all right now in cash. Currently, in the small portfolio, I have no long holdings. I'm not holding any stocks. I'm holding 100% cash in the small portfolio. I do have some short positions that are not in the small portfolio, but basically, currently I'm holding no long positions, and so that's kind of a bummer. But I'm holding no long positions. Let's take a look at the Dow Jones Composite. We did move up today, but it is moving down. Now, the one I've been really watching very carefully is the SPDR, SPY. This is the ETF that covers the S&P 500, and it was actually up today. It rallied to the 21-day line, but I do believe there's going to be some more pain here. I do think that we're going to move down probably to I'm thinking the 3,200 range. Again, this could be way off, but I think going forward, it's probably going to come down more. I'm going to switch over here to the monthly charts. By the way, if you're looking on TikTok, super easy to find out, see all these charts and everything. All you have to do is go to my profile, click on the link, and it says Beacons, and then you'll be able to go directly to the live feed. The live feed is being shown on YouTube at youtube.com/Dallas Trading Floor. Now, let's take a look back at the S&P 500. This is the monthly. This is the monthly chart here. We've gone down and we're testing the 200. We're testing the line here. Let's go to the technicals here. This is the 30-month line. This is about as far out as we can go. As you can see, it's come down. Now, where do I expect to see the strength? Well, I'm drawing a line across here. As you can see, with when we started the COVID downturn, we were right about 3,200. So that's the reason. That's the reason why I believe that we're going to head back to basically where we were. We're going to give up all of the gain that we had on the S&P, and of course, we're looking at the SPDR here, but it covers the S&P 500. I think we're going to give up all the gain. So I do expect us to come down to about 3,200 on the SPDR. I think we're going to give up all of that. All of that upward motion. Now, we could even go down further. As you can see, that's not unprecedented back in the past. Back in 97, it declined like that as well. So I do think that we're going to see a fall off in the S&P, and I don't think it's done yet. Now, even though today was up, I think that over a long period of time, we're likely to see it move lower. So not the greatest thing here altogether. But thanks for holding on, everybody. So appreciate it. Let's take the first question. Thank you, Charles, so much. Well, we got to talk oil. I agree with you. Let's take a look at the oil. First of all, let's look at the sector. And, of course, that would be the XLP. This is the Energy Select Sector Fund for Nope, I'm sorry. That's XLP. That's Consumer Staples. XLP, excuse me. XLE, excuse me. I gave you the wrong information there. Okay, there we go. There we go. Energy Select. Energy Select. Okay, this is really interesting. What's happening is that we did fall down today. We did test the 200-day line. This is on the Energy Select Spider. Why am I looking at this? Well, this covers the entire sector, and I think that's really what you got to look at here is the sector. We have pretty much for the first time we have a downward trending. We have a downward trending relative strength line. And this is significant because basically, through June it was strong, and then into January it's been falling. So we've had this falling relative strength line. So this sector, even though it's the number one sector, still it's falling in terms of strength. Now, what I've been seeing is strength that's coming into the medical sector. Now, I haven't bought anything here, but the medical sector is improving, and the energy sector is moving lower. Now, do I think energy is done? No, I don't. But I do think that we're probably going to see a stabilization in the gas prices. That's my guess, because with crude oil falling below $100 a barrel, I do think that we're going to see. I do think we're going to see a stabilization in the price of oil now, price of gas. Now, I don't think it's going to go down to where it was prior to, during the Trump administration, where it was down below $2. I don't think that's going to happen anytime soon, but because there's still a ton of inflation. But I do think that people are starting to drive less. Prices have gone up, and so I don't think it's going to continue to, like a lot of people say, well, it's going to be, it's going to be $10, $15, $20 a gallon. I don't think that's going to happen. I already think that, with the price of oil moving down rapidly, that we're going to see it level off. That's the part of the reason why we've had basically the sell-off in the energy sector. This is just a really tough market, as I said. It's not easy. The minute that something moves, it moves fast. So right now, we just got to sit on our hands. We can't do anything really in the energy sector. But let's look at some of the big ones. Let's look at ExxonMobil. I was stopped out of all of my energy positions, and so I don't have any energy positions currently. As you can see, this is Exxon, almost exactly a mirror image of. Well, not a mirror image, almost exactly the same as with the XLE. Let's take a look, compare them. I want to compare them together here. Let's look at this XOM, and let's put in XLE here. Oops, no, I'm going to cancel that. I'm going to put in XLE. And this is there we go. Okay, so going to go take a look at, share the screen out here. And let's see if I can share this screen. Okay. All right, so this is basically the XLE compared to ExxonMobil. Now, the reason they're quite similar is because the ExxonMobil is a large component of the XLE. The XLE is basically made up of Exxon and Chevron, and then everybody else. So that's kind of the way it is. So let's throw Chevron on there to see CVX, kind of to see what's going. Now these are the two biggest. These are the two biggest domestic oil companies plus the sector fund, and let's see if that'll let us show them. It's a little bit faint for them, but they basically all follow this exact same trend. So here's the thing. Here's the thing on, at least for right now, I think we got to lay off the energy until we get a base formed. I mean, I think that's the only way to go. I don't think that the energy, obviously is not going to continue to move up indefinitely. We're going to see it kind of stopped in its tracks. Let's look at the New York Stock Exchange Composite. This is also This is all the stocks that are listed on the New York Stock Exchange. This is a little bit different index, but the reason I like this one is it kind of shows us sort of what the general, what the general consensus is on the big board. And of course, there are many more stocks than 500 stocks on the New York Stock Exchange, but because many of the oil stocks are listed on the New York Stock Exchange. It used to be called the American Exchange, but now it's combined. So as you can see, it has moved lower as well. It's all the way down here to 1400, and it definitely looks like it's losing strength. Relative strength line is moving down. So in a nutshell, right now we just have to wait, unfortunately, on the we just have to really wait on oil. We have to wait on oil because it has not bottomed. It will form a base and it will continue to move up. But right now, if you're down more than 7% on any of your any of your things, and I sound like a broken record on this, but I really believe this. This is part of the reason I'm so much in cash is because basically I was limited out of everything. I mean, I basically, the rule is basically never let a stock move against you more than 7%. And then you need to get out. And I know it's very painful because sometimes when you get out, it turns right around, it goes back up. But just if you institute this rule, and what I do is that I for years I didn't do this, but I started doing this basically about 4 years ago, and I just put in hard stops, and if it moves against me, I'm out. I mean, that's just sort of the long and the short of it. All right, thank you very much. Let's take a look, Samuel. DLTR. Oh, Ollie. Let's look at Ollie. Ollie is interesting. It has been moving very nicely. I'm not in it. I've been watching this one. This has been on my watch list. Ollie's Bargain Outlet, and this is looking actually very good. This is one of the few stocks really that has been looking very good. Let's compare Ollie's. Let's go back here to this, and there we go. Okay, so here's Ollie's, how Ollie's has been trading. As you can see, it's moving up very, very nicely. Now I want to compare this. I want to compare Ollie's with ExxonMobil, just to kind of see what. Yeah, see, these are converging. So as ExxonMobil goes down, Ollie's goes up. So Ollie's, and again, I seem like I'm switching around like crazy, but this one actually might be something that that we could really use here. I mean, that we could really see. Now let's look at the big chart for Ollie's. Let's see if I can. Yeah. Let's see if I can change that to the big screen here. And this is basically Ollie's Bargain Outlet. There was this buy point right here at 55.22. Now the question is, can we buy this? Well, it's looking really, really strong. I mean, it is extended. Don't get me wrong, this is extended, but the relative strength line looks very, very good. 97 is the relative, so this is in the top 3% of all stocks right now. There's a lot of buying coming in on this one. Now, why would a retail stock be doing so well? Well, interestingly enough, Ollie's is the company, and what they do is they're opening stores. Retail stocks tend to do best when they're opening a lot of stores, and what Ollie's does is they buy overstocks from the other companies that are going bankrupt. So this does look fairly good. I don't own this one right now, but I am looking at it because of this. I am looking at this. Currently, right now, it's extended. So it's a little bit high. It's 13% above the 21-day line, and so I wouldn't buy it. Yeah, right now I just wouldn't buy it here because the cup base on this was 55.22. Currently we're at 66.27, so we're well above the buy point on this one. So I would be very, very careful regarding this. I would be very careful regarding this, buying this, but it is looking very, very good, and it's definitely on my watch list. I'm going to add it into my my list. That's potential short restriction. Blah blah blah. Okay. There's some of the ones I have in there. So I definitely like the action on this one. I don't think I would buy it right here because I do think it's going to pull back. But if this thing pulls back to the 21-day line, that's what I'm kind of expecting. If this pulls back to the 10-day line, you could buy this at the 10-day line, I think. The 10-day line currently on Ollie's is, let's take a look at the technicals. It's about 61. So if it pulls back about $5, that's where you could buy it. I think you could buy it right about there. I think you could buy it right about there. Come on. It's a little bit full. There we go. Let's kind of put these lines in. Basically, what we're trying to see is that pink line, and that's the 10-day line. I do think that you could possibly put in a small order there. Now you notice that I was looking to short this. I'm glad I didn't because because it definitely moved in the right direction. So right now, relative strength line moving up. That's definitely a good sign, and it's getting close to the 21-day line. That's what's so treacherous about this market. I mean, even the ones that you think that are good, you don't necessarily do it right. Let's look at Dollar Tree. This is the other one kind of. DLTR is probably, and I did well with this one a few months ago. I did well with Dollar Tree, and then it's come down. Yeah, see, I rode this up. So Dollar Tree night is right now looking very, very good. It just has come up to the buy point at 156. So this one, you could buy it here. It's gonna have a little bit of resistance at this pivot. So I kind of expect it to move. If it can move above this pivot, then I think it's buyable. On the pattern recognition, yeah, I mean, this is looking good. I mean, it's basically right at the pivot. So it is not extended at all. I mean, technically this one is buyable. The question is, where can you buy it? Well, if you bought it here, I would be relatively. I mean, I bought it back here in March. I did well in this in March, as you can see. I had 3 buys, and then we sold. I did, but this one a little bit more difficult. I mean, obviously, what I should have been I should have been buying it off that reversal line. That's the reversal line, and moving it up. But could you buy here? Well, let's see if it pulls back. I don't think it's going to pull back that much because it's up and after hours. So this wouldn't be a bad buy. Now, here's the thing. If you do buy this, you must put your stop loss in very, very tight. What I would recommend on this, if you do buy this, I would put my stop loss right at about 163. Now I know that's very tight. That's like within $1 there, but I would put it in about 163, and the reason is because that is the bottom of the last little uptick. So that's right about here. So this one is buyable. Now, I don't believe that. I don't think that I think Ollie's is extended. I mean, I think Ollie's is extended, but I think Dollar Tree is buyable. Now, I don't own either of them, but Dollar Tree, DLTR is at the buy point. But this market, it is so unforgiving that I wouldn't go in with a big position here. I wouldn't go in with a big position. I would probably go in possibly with a half position. It's got a 98 relative strength and I do think that we're going to get a rally for probably about another week or two, and then I think we're going to reverse lower. But I do think that Dollar Tree is buyable, but I wouldn't buy a lot of it, and I would put my stop loss very, very tight. I would be looking at stop loss on DLTR at, and I'm going to say and I really think this is true. I mean, I think that you're looking really at about 162. 162. Now that's very, very tight. Uh, that's very, very tight. But if you were to put it there at that level, and it did pull back, and I think there's a likelihood that it will pull back because it's going to have a little bit of trouble moving past that pivot. But if it did pull back, then you would be out. Now it can fall literally to this reversal line very easily in a day. So that's the reason why I'm so conservative in terms of the stop loss. Normally I would put a 7% stop loss on this one, but in this case probably not. I would probably go with a much tighter stop loss. But thanks. All right. I missed that one. Yeah, it sure did. It sure did. Um, all these bargain warehouse has been very, very good. All right, let's look at two other ones. This is Lilly, and of course this is in the medical sector. LLY is the symbol of Lilly, and with Lilly, we're starting to see a little bit of tightness at the very top of the at the very part of the buy range. It's slightly above the buy point. The buy point is 314 right here. That's the buy point. And it's in this consolidation, this little mini consolidation, this mini flag. So it does look like, and if you look at the volume is decreasing, but it's to the upside. So this does look like a good place that you could possibly buy it. Now, I wouldn't buy it too much higher than this, but Lilly does look like it's buyable. Look at the relative strength line. It's straight up. So that is very, very positive. That's very positive here, and it's 97, and the relative strength line is straight up. So this is also a possible buy, even though it is a little bit high. LLY, Lilly, and then of course Dollar Tree DLTR is also buyable, I believe, as well here. So both excellent. Thank you for that. The TBT, this one should. I probably, I sold my position in TBT, and it does look like, yeah, you can see, there we go. So I sold it, I moved it up and sold it, and then it's been moving down. So I do expect right now this to move lower, to move lower, at least for right now. All right, let's take a call from TikTok. Thank you so much for taking a look. All right, let's see. Thoughts on Google? All right, good question. Google, of course, is been in sort of this downward trend. And of course, it's called Alphabet. GOGL is the symbol on it. And it has been sort of in this downward trend. I mean, we did have it rally today up to the 50-day line. But it is, it is still in this downward trend. Now, the relative strength line did move up a little bit, but it's a 53, and overall there's a downward trend on the relative strength line. So here's what I would do with Google. I would not be a buyer of Google at this point because I want to see the relative strength line turn around on this one. So right now, I would not be a buyer of Google, just because it, the relative strength line is moving lower, and so it does not look. It does not look good for it. So I would not be a buyer of Google right now. So it's GOGL, it's not GOO. GOO. There we go. So GOOGL. All right. So I would not be a buyer of Google at this level. It's in a downward trend. and also the relative strength line is moving lower. So not a good sign there as well. So I wouldn't be a buyer of Google at this level. Again, if you're down more than 7%, consider selling it. Just not not a great thing. Why people like Elon, Kathy Woods are saying crypto is the future and it will be. Well, I don't think it is. I wish it was. I mean, I wish a lot of things. But let's look at the GBTC. This is the Grayscale Bitcoin Trust. GBTC. This has been having trouble right now. Great G. Let's see. GBTC. There we go. Sometimes I don't do this. This is the Grayscale Bitcoin Trust. This represents about 4% of the world's Bitcoin. All right. As you can see, I was actively trading it back here, but I really haven't traded it since last year. And you can see it started its movement lower, and it's just been going down. It's currently at $12. I do think this is going lower, by the way. This is not a bad short, I don't think. As you can see, it's has the death cross on it, and it's kind of come up for air, and it's kind of bouncing down this 21-day line. Now, the problem with Bitcoin is we're going to see a lot of people that want redemptions from their Bitcoin. They want to get their cash out. And I just don't see this happening because I see these exchanges with not enough liquidity. I mean, Voyager Digital went down today. I believe, I can't remember the two other ones that are not accepting withdrawals. If you're in Coinbase, I'd really consider possibly seeing if you can get your money out, because I think these may go down. I mean, they absolutely may go down. So just not a great thing. Let's take a look for Roman at SMH. And we're almost, there we go. Oh, the semiconductor index. This is ETF. This is a good ETF when the market is going. But remember, I would like to be in this one too, but just not there. It's just this is not a good look on the. This is just not a good look. So I don't think you can buy this one right now until it forms a base, and unfortunately, it just doesn't have a base. Now I've been so negative on everything. Let's take a look to see if there's any area of the market that is looking good, and we can possibly look at. So I'm going to go over here to the top areas in the industry groups and kind of see, sort of what is still working. Now, most of the industry groups that have the top ranks are still in the energy sector, and I do think that we are starting to see a turn on the energy sector. I think that there's been enough demand destruction that we're going to see the prices remain high, but I think that many of the things are going to start to they're going to see stuff move up. Now, there are some most of the energy related things are there, but there is this one. It's called the drug suppliers, and this is where McKesson is. This is an area that I am looking at closely right now. It's in the medical area, and it does appear that it has bottomed. This area has bottomed. And this is the medical wholesale drug supplier area. Now, and it does have a high relative strength, but the line is pointing down a little bit. The top stocks in this area, the big dog here is McKesson, and this is the one that I do believe is potentially you can potentially look at this one. I do think this one is going to go higher. It's in a consolidation between 339 and about 303. This is the consolidation here area. This is a stock that I am looking at potentially myself. It is pulled back to the 21-day line. This is probably a good place to buy it. It is not quite at the pivot. I do think this one is a good stock. Now, it does have a relative strength of 98, which is very strong. But the general trend of the The general trend of the relative strength line is upwards. Now, here's the thing. I think this one possibly will be good for maybe 1 to 2 weeks. That's when I think we're going to see another leg down in the market. But this one possibly is a possible buy, and it's in an area that is starting to emerge, and this is a very strong company. So McKesson, MCKESSON, MCK is the symbol on it. Did I write that in there right? MCKESSON. There we go. So this is the stock. MCK is the symbol on it. So McKesson is the stock that I do like this stock. It's the leader in this area, which is the medical wholesale drug suppliers. This is the big dog, and it is working very, very well. This is starting to gain strength. This is the only area of the market that's really not energy related. Now there is energy solar in here, but I think you got to be careful with those because of the Chinese exposure. But everything else is oil and gas. I do think that we're going to see this area fall off a little bit. And this, I do think the area that is going to replace it is probably going to be the drug suppliers. They tend to be very strong. A lot of this is money that's looking for a safe haven. I don't think this company is going to have any problems with their. I don't think McKesson is going to have any problems with their profitability. This is a huge company. It's based here now in Texas. It moved from San Francisco, but I think this is a very good bet. I think this is a very, very good bet. Earnings have been moving up very nicely. The price to earnings ratio on this one is 14, which is incredible, considering how much cash flow this has. So that's an area that I think that you can look at possibly for kind of a safe haven. If you want to put your toe in the water, if you want to put your toe in the water. All right, let's look at KO. This is Coca-Cola. There's two Coca-Colas out there because it's kind of split into two. There's KO and there's COKE. One is the bottler and the other one is the actual company. KO is the actual, company that has the secret sauce and everything. That's the actual company. This is the Warren Buffett. This is the ultimate Warren Buffett stock, and it does do well in tough environments because they do. People like their products. Relative strength 94. We have a nicely accelerating relative strength. This line shows the relative strength against the rest of the market. Notice how the S&P 500 is moving down. This is moving up. So this is moving above. This is moving the opposite direction of the S&P. So this is a very strong stock. Would I buy it here? Well, it is in. It's possibly a good place to buy it at the 21-day line. Let's see if we go back to the daily chart here. It's in this consolidation. There is a consolidation. I don't think it shows it. Yeah, there's the top of the consolidation there. So has it moved beyond that reversal line? Well, let's take a look. I think you could possibly say that this is reversing higher. This is reversing higher, but it's still very tenuous. It's very tenuous. This is not like a tech stock. As you can see, it's the relative strength line is pointing down. I think you just got to wait on it. I just think you got to wait on it. Unfortunately, I would not be buying it. Any opinion on dollar euro hit today? Does Rice Industry? No, I think the Europeans are going to have a. The problem with the Europeans is that they're going because of the energy situation, and it's really different between the United States and Europe. Because of that, they're going to have a much more difficulty. There's almost a direct euro-dollar parity. Once again, when the world gets into trouble, people move into cash. I mean, that's part of the reason why I'm sitting in cash. Why? Because actually, cash is one of the better right now is one of the better performing assets classes out there. Bitcoin is dropping against it. The equities are dropping against it. Real estate's dropping against it. Cash is king, and so right now that seems to be the best place to be. Just a kind of weird thing. Have to go, but it would be nice to hear. Thank you very much. Short stay remedy. Have a good one. Thank you so much, Brian. So appreciate it. Thank you for taking a look. All right, let's take the last question because people have to get to their stuff. Jim, will the market sell off soon? I think we're going to see a short-term rally for about another 2 weeks, and then I think it will start to sell off again. I don't like being. This is not my nature to be bearish like this. But I have to say I kind of am because I think that this when they hike the rates again, it's gonna hurt the market. I mean that's just the long and the short of it. It's just gonna hurt the market. Let's see what the discount rate's doing. All right, not much there. This is the rates that are going up. Let's see if I can get. Let's look at what's happening in Asia. Let's compare Asia. This is Asia. Let's compare Asia to. Let's compare Asia to the U.S. Dow. So what I'm doing here now is I'm trying to give you a look-see at the the Dow, the Asian Dow, the actual Dow against the Asian Dow. So as you can see, right now the Asian markets are significantly underperforming the American markets. They're both down. But the Asian market is underperforming. So it does not make sense right now, according to this. It does not make sense to pile into some of the China stocks right now. It just doesn't, because it's underperforming the U.S. market. Now the U.S. market's not doing that great either, but it's doing better than the Asian Dow. So, kind of bad. All right, Mr. Jeet, let's look at Datadog. I was going to short this one. I'm glad I didn't because they've been having some good. They've been moving nicely, and it I'm glad I didn't short this one. I've made some errors in the last few times, but here is Datadog. Let's kind of look at it. It definitely is reversing higher, and I do like this relative strength line is starting to point up. But the question is this enough? Well, I mean, yes, it's moved beyond this reversal line, but that doesn't mean it's based or it's come up to the 200-day line. So, I think you just have to. I just think you have to. You just have to kind of wait here. Let's compare those two, and this will probably be the last one. This is Datadog against NVIDIA. Okay, let's look at both of them. Interestingly enough, well, Datadog is definitely doing better than NVIDIA. I mean, that's we can definitely see that here. I mean, Datadog is moved up, and it's moving up, and NVIDIA is moving down. So in terms of that space, overall, of course, it's a downward trend. As you can see, it's a downward trend. So overall, it's a downward trend, but Datadog is outperforming is outperforming NVIDIA. So just really, really not the greatest market out there right now. That hit the like. Oh, thank you very much. By the way, please hit the like button. I so appreciate it. Really helps me out. Going into the summer, I wasn't able to make the broadcast yesterday. It was technical problems on my end. Hopefully that's going to get better. But do please hit the like button. It so helps me out. And if you're not a member of the Discord room, consider that. You can just do it by going to www.dallastradingfloor.com, and that's all in there. So I will be back tomorrow at about 5. Thanks, everybody, so much. I so appreciate everyone tuning into the show. Thank you very, very much. And I will be back tomorrow. Happy trading, and I will see you soon.